I would like to do a quick introduction of who he is. Okay, this person, he has been appearing in a lot of the trading scenes and seminars, and he has already been conducting a lot of class for many of his students. And I don't want to oversell him, so maybe I'll let him to introduce more of himself. Okay, so this person that we're going to invite up next, right? His name is Alvin, and he's known as the astrologist trader, and he's someone who actually profit from the financial market, right, based on aligned astrological energy of the time. All right, so so we are talking about astrological, like maybe the sun, the moon, and also I want to let him to to explain much more on what he does. Okay, he's actually also a professional full-time trader. Has been investing and trading in the stock market for more than 20 years. And since his retirement from corporate world years ago, he has been actually devoting a lot of his time teaching his income replacement formula through professional investment and trading to hundreds of students that has been in US, UK, Malaysia, Singapore, Taiwan, and even in Australia. Okay, so he is also a founder of a Money Smart Academy and creator of Money Smart Traders brand. Okay, and he has also been speaking on the same stage with Nick Vujicic, Mary Buffett, and also Sean Xia, right? So without further ado, right, I would like to invite him up. Okay, Alvin, are you there, Alvin?
Okay, hey,
All
sorry,
right.
I couldn't unmute myself. I'm not sure whether I've been made
Yeah,
co-host or something.
we can hear you. We can hear you already. Yeah.
Okay, cool. How are you guys doing so far? I think we have actually had a great presentation by Ken, right? I think a lot of us actually learned a great deal about what value is all about, especially keeping your kind of like your saving in cash form. That is definitely not a good idea. And also, I think Yongsheng has actually talked about how when people are actually suffering and the stock market is surging, and especially people who are really trading the market or investing in the stock market or any kind of market, you'll find that a lot of them are actually profiting a lot during the pandemic recovery, and also when during the pandemic time, a lot of us are actually shorting the market, yeah, making a lot more money on the way down.
Exactly,
So
exactly.
yeah, so I'm glad that I'm actually invited to speak on this stage. I know some of you may have actually heard me speak before. Um, so let me just share my slide. I know we are also a little bit over time. Let me share my slide. And
So
can you?
we leave the screen to you, okay?
Yeah, sure. Yeah, thank you very much. Okay. Now, first of all, you guys actually have to really give yourself a pat on the shoulder, right? Because this is really, early morning in the weekend, and you actually find time to spend with the 8 or 9 of us over here, showing you what kind of options you may have during this uncertain time. Yeah, and today's topic for me, of course, I'm not going to talk about astrology because I'm personally an astrologist. I do practice astrology, Chinese astrology to be specific. But I do actually look out for astrological energy that aligns with certain sectors in the market, and I do also invest based on astrological energy. Yeah, but today's topic is all about trading, right? We have actually had Ken talk about investment, right? So what I'm going to share with you is really the strategies for you to use right away after this class. Yeah, once you have actually attended this 20 minutes, you'll find that there are certain strategies that you can really implement right away trading stocks. So I'm going to go ahead start with that. But before I really begin, let's step back and really talk about investing first. Yeah, so it's like what Ken talked about. Now we know that in investing, a lot of things are really based on the company performance, right? So before, say for example, if you want to invest into a stock, how do you determine whether that stock is for you, is good to invest or is not? Yeah, so you must actually have some what we call fundamentals, right? So a lot of people like us, we actually do fundamental analysis, which is really looking into the company's performance, which is the accounting book, yeah. So but it's really not that not that difficult. We really don't need to know all read all the P&L and balance sheet and all that. But there are really certain ways to actually look at the fundamental and understand whether the company is still healthy, is performing, is actually doing what they're supposed to do and generate income for the investors. Yeah. So so what we want to do when we invest is really to the what is really to to buy, what to buy is really depends on fundamental analysis. It means the company has to perform well. Yeah, and when to buy is really depending on valuation, right? So Ken actually talk about the deep, during pandemic, there are a lot of companies that are really going undervalued. Yeah, so you'll actually continue to hear about overvalued and undervalued. Yeah, so when the stocks actually go undervalued, it means that the company is worth a lot more than what the current stock price depicts. Yeah, so that's when there's a good time for you to go in and buy, right, and hold for the longer term. And that's what investment is all about. So for that investment, I'll probably call it, kind of like a buy low and sell high type of game. Yeah, because no investors will want to, buy high and then sell low, right? So how many of you actually want to buy high and sell low? None, right? So it's, so it's really a game of buying low and selling high. But the challenge, but one thing that you got to understand is that even though however good you are in reading the fundamentals of a company, do you think fundamental analysis actually equals the actual stock price? So can you actually type down on the chat window whether you think this is actually equal? If you think this is actually equal, just type equal. If it's not, just type not. Yeah. So when the company is doing well, it's actually performing, do you think the stock price will actually correlate directly? So, in my opinion, it's really not. It does not. You got to understand that, in the stock market, it is really a free, open market, right? So we know that there's a supply side, there's a demand side, there's a buyer, there's a seller. So whether the stock price it appreciates or increase, depends on how many buyers are there convicted to really buy up, right? And when there are way too many sellers convicted to sell down, you'll find that the stock price actually goes down. So in my opinion, fundamental analysis is, we are assuming that by looking at fundamentals, if you are selecting the right fundamentally strong company, the stock price will increase. Now that's a big assumption. But in general term, we are saying that, when fundamentals are good, in the long term, the market will correct itself and adjust, based on its value. Does it make sense? Yeah, so but in all honesty, I personally don't believe that fundamental analysis equals stock price. It is never equal. You won't find a stock that is actually always staying at that price with in accordance to the company's performance, right? So now what I want to actually probably say is that fundamental analysis leads to a stock price increase. Now that's an assumption. Now you may find in the past, now lately, it's actually quite congruent. But in the past, you may find that companies that are really doing well, like IBM's, right? In olden days, they are doing well. Fundamentally, they were very strong, but the stock price did not appreciate that much. Does it make sense? Or you may find companies that were losing money, like Tesla. Like 1 year or 2 years ago, Tesla was still losing money, big time, right? So every dollar you actually invested in Tesla, the company is actually burning your money for you. Okay, it's burning away the money for you. Yeah, but people still injected fund into the company, right? So fundamentally strong company, the price may not appreciate that much. Fundamentally weak company is not proven to make money yet, but people actually keep driving the stock price up. Very clear example that fundamental analysis really does not equal stock price. Yeah, but it does lead to hopefully the stock price increase. Yeah, so now that is the challenge. If we need to actually invest, and we need to actually look at the fundamental before we can invest. So how do we invest in something like this? For example, in the past, now USA is the country where it has the most IPO startups in the world. Okay, so look at the increase. Yeah, so from the olden days, 2018, the number keep increasing until between this time, right? From 2020 to 2020, you see the IPOs, the company, the new startups that are being listed on the stock exchange keep increasing, right? So between these 20 years, you'll find that it's already about 6,000, close to 4,700 companies being listed on the stock exchange. So it means that there are a lot more startups that are going to come up, right about now and onwards, because technology fuels those startups. Yeah, so a lot of these startups are actually technology driven. So if you look at some of the stocks like this, yeah, like Snowflake. In the past, now of course this slide was a bit dated, but when I actually did it a couple months ago, looking at the statistics of Snowflakes, yeah, in 3 months the stock actually appreciated 37%, and a Datadog appreciated 183% in one, slightly more than a year, and Fastly appreciated, close to 300% in 1.5 years. And you'll find Palantir, it's a data science, data mining type company, and it's appreciating at a rate of 196% in less than 3 months, right? And what about Zoom? I think the software that we are using right now, right, it's appreciating at 539% in 1.5 years. So ask yourself, if you are an investor, and as an investor, the core fundamental understanding is that you invest in a company that is actually proven to generate income, right? And continue to grow the way it is. Now, with these IPOs, there's no book to actually analyze. They probably haven't actually made money like Tesla did, last time, right? So how do you invest? So if you really invest in this kind of startup, it's kind of like, you are really doing what? It's really taking a chance, don't you think? Although in the recent days, especially in the past 1 to 2 years, you'll find that IPOs, companies that are just listed on the stock exchange, typically if you actually buy it right at the opening or whatever, or if you could actually get onto the pre-IPO price, you are likely to win or make a profit, right? Likely, but again, that is actually just a gamble, right? So it is absolutely not repeatable. Nobody will know in 1 year or 2 years time whether this kind of phenomena will still continue, right? Now, if if any of you was looking into the stock market way back, like Facebook, okay, when Facebook was first listed on the stock exchange, it actually went down. It came back down, right? After it listed for a while, it actually came back down. So people who actually invested in Facebook actually lost money. But if they actually held on to it long enough, you'll find that Facebook is more than $300 right now. Yeah. So what does this tell you now? If you invest in an IPO company, it's kind of like a gamble if you are an investor, because there's no performance to be assessed. Yeah, because they are new. They haven't proven themselves that they can make money as a company. But so like in Facebook case, how does Facebook eventually actually drive the stock price up? It's because over the years, right, they have proven that their advertising can make money, a lot of the things that Facebook is actually doing allows them to actually have phenomenal performance or profit growth. And that's when the stock price correlates. Yeah, correlates, because people start to understand that, okay, company like Facebook is really a company that can make money, and they are actually starting to prove that they can make money. And that's when people or buyers or investors really jump in and continue to buy up. Make sense? Yeah. So if you really just jump onto all these big hoo-has, a lot of these new IPOs out there, you are really taking a chance, and it is really not a repeatable process, because in next year we don't know what's going to happen with all IPO companies. Yeah. And 2 years and 5 years later, we also won't know what kind of chances we will get. Yeah. So it's like gambling. There's no real good statistical data telling you that, okay, this is going to be it. All right. So now in this case, is there a statistical solution then? Okay. And this is really what this session is all about. Yeah. So we are talking about trading. We're not talking about investing, because as I first started on investing, we buy low and sell high, right? And we really need to depend a lot on fundamental analysis, understanding the company performance before we decide to buy. And even if you want to buy, we really need to look at the value, right? If it's overbought, it's overvalued, it's too hot, you are paying a lot more to own a company that is not that performing. Yeah, so it doesn't make sense. So there are a lot of these considerations, and one of the tough part is that if you want to invest, do you think it's the right time to invest now? Now, if you think it is the right time to invest right now, like today, like when the market opens on Monday, okay, if you think it's the right time to invest, buy and hold on long term, right? Can you actually type invest, okay, on the chat window if you think this is the right time? Now, the market has already gone all-time high, right? It's close to all-time high right now. And if you invest, it means that you are likely to buy companies that are way, way, way overvalued. So do you think that investment, as an investor, you have to wait? Yeah, it's always a waiting game, right? Because you always want to buy low and then sell high. Now, trading is very different. Yeah. So what I'm going to introduce to you is really trading, because hang on a sec. Yeah, because it's really something about just looking at a chart, and through pattern recognition, you are able to actually kind of like make a bet against the market, and try to take some profit away. Yeah, so it's really a statistical game, and in this particular trading discipline, what we are talking about is really to look out for pattern, and pattern luckily for us, yeah, past patterns or historical patterns really tend to repeat itself. And so there are patterns to be seen. So what we are here, as a trader is that, we are trying to look out for patterns like this. For example, when in the olden days, I remember when I was still a kid, I actually played this kind of game before, right? How many of you actually played this kind of game before? If you did, can you actually type me, ME, yeah? It's like, this is a shape, shape game, right? So it's trying to actually teach your kids, understanding shapes. Yeah, what shape, goes into what slots. Yeah. So pattern recognition trading is all about that. In fact, it's really not any more difficult than that. Yeah, so it's really looking at the pattern, and because there's a phenomena that the past pattern will repeat itself in the future, if we can get the past pattern, we are able to predict the future and make a profit out of it. Yeah, so this is what trading is all about. And of course, with trading, a lot of things are possible. Yeah, we're not talking about just investment in the stock market. If you understand trading as a professional skill, you're able to really trade any instruments in the market, any asset classes if you like. Now, if you ask me, right now, I've been trading a lot of these asset classes. Yeah, I've been into stock and ETF. I'm actually trading CFD. I'm actually trading options. I'm trading forex. I'm trading commodity and crypto. So don't you think this one skill itself is really awful? You can really trade. If you learn this skill, you are able to trade any instruments at all. Now, the good thing is that stock market, we know that it's actually closed 9 to 5, right? 5 days a week, 9 hours a day. Then, if you really want a lot more money, go into Forex because it's 24/5, right? So that's when I actually get into Forex as well, because I'm able to actually make money, anytime, 24/5. So 5 days a week, 24 hours a day. Now, why did I go into trading crypto then? Because crypto is 24/7. Okay, does it make sense? Yeah, so it's just exciting. If you really get this skill, you can find that, okay, any instrument that you trade, right, is able to make you money every single day, right? Every single moment you want. So it's like, the ATM there, right? If you want to actually take money out, just go trade any market and just draw your money, right? But of course, you got to have the skill to do that.
Oh yeah, maybe Alvin, you also can let us know, right? Like stock ETF, right? Maybe you can let us know, like ETFs, like how does it benefit with that with based on what you have explained earlier.
Okay, now stock and ETF. Now ETF itself is rather different. Now, for example, when Ken talk about future, when the economy is actually reopened, you'll find that things are actually kind of like a floodgate, right? People are rushing into doing certain things. Yeah, so in that sense, you don't necessarily need to invest into particular stocks. You can invest into a sector of a stock. Does it make sense? So for example, let's say we say, okay, a lot of people, I think all of us are actually tied back at home, right? So when we can finally be free, what do we want to do best? Go travel, go buy stuff, right? So when we buy stuff, what kind of stuff do we buy? Consumer stuff, right? So consumer discretionary sector is gonna boom. Yeah. Tourism, of course, tourism has a lot to do with consumer discretionary, right? Hotel stocks. So you don't necessarily need to buy, let's say, Marriott or Hilton or whatever, as a stock itself, but you can really buy a sector. So a sector in this case, is like an ETF. You can actually buy ETF where it represents the whole sector. So your portfolio is more protected. It's not that risky. Yeah. If you select the wrong stock, that stock may go down and your whole portfolio is gone, right? So if you invest into a whole sector, you are more protected, in that sense. Okay, so I hope I actually explained a little bit about that. And of course, technological stock, you can, rather than investing in Facebook or individual technological company, you may want to invest into a technology sector. Now, technology sector is very easy, right? Type XLK, right? You'll find that XLK as a symbol is actually technology ETF. Yeah, if you want to actually get into technology, but it's more in the communication sector, you can actually go into XLC. Yeah, so you can buy XLC as an ETF. Yeah, so there are a lot of things. So this trading thing, actually opens up all these, various options for you. Yeah, so it's all possible. Now, but one thing about trading is that we talk about pattern recognition. Yeah, but once you know the pattern, you also need to have strategies. Now, what strategies? What does strategy mean? It means when we trade, if we actually hit certain obstacles, if we see certain things like this, what would we react? That's a plan. That's a strategy, right? You must have a strategy before you actually step into a battlefield. So it's like our life, yeah. If let's say if you actually just walk on the street and you actually stumble and fall, what are you gonna do? You must have a situational action that you can take, right? to actually get up, just quickly clean your wound and probably, perhaps go to the hospital or clinic and check and something like that. So trading is exactly like what we move on day and day, day to day, as life move on. Yeah. So you need a strategy. If the market is, if we are with the market and we are right, we are going in the right direction, what do we do? If we are with the market and the market is going against us, what do we do? And that's what strategy is all about. Yeah. So in trading, you've got to be able to control all these aspects.
Oh yeah, so maybe Alvin, this one because due to time limit, due to the time limitation, right? You will be also sharing with us more about how you will be giving us these tips, right? Maybe you can elaborate that for us also.
Okay. I didn't know, time actually went so fast. Now the thing is that perhaps now let me just fast forward this. Yeah. So I promise that I'll be telling you, the two patterns or the two strategies that you can actually take. Yeah. So now in the stock market, it's either going in the trending mode, right? Trending like this, or going into consolidation. It means it goes nowhere, right? Ding dong, nowhere. Yeah. In the middle, it goes nowhere and it trends again. Yeah. So stock market only behaves in two ways. These two ways. So what I'm going to teach you is, strategies that you can really go ahead and apply right away after this session. Yeah. So what it means that look at the stock chart, right? Whenever it does a transition, right? Something like this, right? It does a transition, you start to buy, right? If you miss this transition, you can buy at the next transition and next and next and next. It's fairly simple. So this is how you can actually buy when the trend is in place. Yeah. When the stock is clearly in a very nice trend, you just buy on price transition. And the second strategy is really, when the price goes in consolidation, right? So it's actually going nowhere in the middle. That's when you can actually buy here and sell here, right? So what we call these lines the support line and resistance line. Yeah, it doesn't matter. It's a technical term, but what it means that if you're able to recognize this pattern, yeah, when it goes sideways like this, draw some lines, right, to bracket it, then you can always buy here and sell here. All right. So in this chart, right, in fact you can actually profit 3 times. You buy here, you sell here 1 time profit, buy here, sell here 2nd time, buy here and 3rd, sell here. Now I'm really about to finish. Yeah, so let me just give you a live example because I want to really show you, it's not just about theory. Yeah. So look at the Facebook chart right now. Now this is really the chart as of last Friday. Okay, so this is the closure of last Friday. Facebook was at 1313. Yeah. So it's very simple. So how do we identify, how do we use the two strategies? Do you find that this is actually in trending mode? This is in consolidation mode? Yeah. So it's fairly simple, right? So once you are able to identify trending and consolidation, what you need to do is that you buy a transition. So if you want to trend it up, right, and buy and continue to buy up, every transition you just, you buy. If you miss the first one, you can buy the second, and then miss the second, you can actually buy the third. Now, another clear one is really this, yeah, the consolidation where Facebook is at. I profited a lot of times, with this consolidation. Yeah, very simple. Buy here, sell here 1 time. Buy here, sell here 2nd time. Buy here, sell here 3rd time. Buy here, sell here 4 times. So how many of you actually want to make this kind of income? It's no brainer. I mean, frankly, it's really no brainer. Buy as support, sell at resistance, and you'll be able to pocket 4 times just on this Facebook chart.
Right, Alvin, maybe you can let us know because I understand you actually prepared something for the participants, right? You can let us know about that.
Yep, exactly. Now I'm actually getting into it right away. Yeah. So, but all these strategies actually won't work if you do not know the whole system. Yeah, because in trading there's a whole lot. It's a whole ecosystem altogether with a lot of aspects that you need to take care of now, which is why I am gonna actually, I'm gonna actually share with you what I've actually built up for you to bring home, right? So go to this link. Let me just type it down here just so that people can.
Don't worry, I'll help you with that, Alvin.
Okay,
just
cool,
continue.
cool. Yeah. All right. Yeah, so go to this link, right? I've actually prepared the trading success blueprint for you. Essentially, it's just a trading ecosystem, right? It's an ecosystem that tells you what it takes to be a trader and what kind of aspects do you need to take care of and to be a trader. And this is actually an accumulation of a lot of my years of experience. Okay, when I started trading back then, I never had this kind of thing with me. Yeah, so trading was a little bit difficult. Okay, and after trading for so many years, investing in the stock market for so many years, I've actually consolidated this into one blueprint for you. So actually go ahead and do download that. And I hope, this actually covers a lot of other aspects for you. And if you do have any question, you can always find me here. Go to my Facebook page, Money Smart Traders by Alvin Tung, like it and follow it. And also if you have any personal question, you can also, email me at this email address. Okay, and thank you very much.
Right.
I am sorry for going off time. Okay, thank you, Yongchen.
Thank you, Alvin.
No,
Thank you.
don't say that. Don't worry. Yeah.
Yeah, actually, we do have some question on the chat. So Alvin will attend to your question later. So no worries.
Yep.
And, thank you, Alvin, for sharing.
Okay. All right. Thank you very much, guys. You've been a sport. All right.
Thank you.
Thank you.
Uh,